Futures point to a slightly higher open following the Fed's statement that it will keep interest rates low until 2014 to aid the economic recovery. On the corporate calendar, notable names reporting today are AT&T, Caterpillar, Nokia, Motorola, Starbucks, and Juniper. Economic data on tap includes jobless claims, durable goods, new home sales, and leading indicators. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Good morning, everyone. It's Thursday. It's earnings season. The calendar is packed, not only on the corporate side, but also on the economic indicator side. But, Scott, let's take a look at the SPX. This thing is ready to hit some new highs.
Yes, it is. We've been following these two trends, and we've been talking about it all week. A lot of people have been trying to fight this move, but you've been very rewarded by staying with it. And I know it's tough to follow a trend. It's definitely, definitely when it starts getting accelerated, when it starts moving higher. But until it breaks, you stay with it. You don't always have to be heavy in a tier 2 or tier 3, but stay the course. So if you look here at the chart of the SPX, you will see what an unbelievable move. This is the gradual trend we've talked about since that October 4th low. Here's a low. Here's a higher low in November, a higher low in December. Then remember this descending channel. We broke to the upside. Then we broke this downtrend, and that's when we started this new accelerated uptrend. Now, all week long, I talked about this floor and the spiders around 130.50 or around 1303, and it held. No reason to get out, maybe a reason to be cautious, but it held, and we continued. Now, the next area of real resistance doesn't really come into play until about 1330 to 1345, so that's the next zone. And if you want to take some profits into that zone, that's fine. But don't just start fighting it because it's a number. Speaking of strength and floors, we're going to take a look at the materials sector for the sector spotlight today. What's interesting here, not only from looking at different levels, we've seen really interesting put activity where people are selling around the 30 strike, which indicates there might be a floor there as well. Yeah, well, if you look at the chart here of X is something we've been targeting for the past, 3 days. I love this pattern. I love that it was getting tighter and tighter. And then when AKS came out with earnings and it wouldn't go lower on a bad report, I really got aggressive yesterday. It was a great buy above 29.12 this high, extending here with volume. This has room to about 33 to maybe even 33.78. Traded along the way, but that's the next resistance. Well, I also think maintaining interest rates where they are, too, is going to be great for the commodity sector and emerging market space as well. So I had a little help from the Fed, but overall the pattern looked ready. Moving along to the trenches, we're going to look at the banks today from also the regionals and also the big brokers. Yeah, well, the banks have been holding up. It's been a great January effect play and more. Even yesterday with a downgrade in Morgan and Goldman. Look what Goldman Sachs did yesterday. It yawned. Goldman Sachs actually wound up flagging exactly what we said. This is the resistance or the support that I outlined. And now I might trade this thing. This goes above 109, 110. You could see it move to about 115. And if you look at Bank of America, it was actually positive yesterday as well, coming into a major resistance here at around 743. It gets above this. This is going to see 8 to 830 sooner than anyone would have thought. Well, I hope that the sector really does continue to lend some support to the market. We had Jamie Dimon speak this morning from Davos. He doesn't expect the U.S. banks to get any fallout from the Greece situation. He thinks that the Eurozone will eventually correct itself. And then if you look at the regional perspective, loan growth and credit quality looks really good. So we're getting some positive information, and as long as Europe continues to muddle along, there's a lot of great trades. And if we go to even other sectors like the casinos, we spoke about LVS, looks like it's going to go above 50. You look at Wynn here, even coming off the low. We called the bottom in this, and now I think it continues. Wynn has room to about 130 to 134. I like this casino group. Looks like it has upside. And then you have tech, which has been a little erratic and a little right place, right time. But with all these sectors working together, it's a very positive environment for traders. Right. And just to wrap it up real quick, I want to take a look at GLD. You and Alex have been speaking about this, and it's just had such a run. Well, it finally broke the downtrend. Sperling, I have to give him all the credit, was on the radio. Fed came out with news. He's like, I'm buying GLD. I like it. GLD actually wound up going through this downtrend. If you take a look at the chart, you will see it was powerful. It broke it. This was the high in August. Broke through with volume, and now it's up a little bit. I think the next level in these GLDs is around 170. Hopefully you covered when we spoke about it on Street Signs on that last Thursday before the new year. All right, so we got a lot on tap today besides the corporate calendar, jobless claims, leading indicators, new home sales. There's a lot to look at the tape. Don't forget, every single day, catch Scott on Options Profits and T3Live.com as he wraps up the charts for us.